What if America's next line of defense isn't the Pentagon? It's Wall Street. JPMorgan just put $1.5 trillion on the table to secure the nation's future and its own. For the first time since World War II, private finance is writing industrial policy. JPMorgan Chase has launched a decade-long Security and Resiliency Initiative, a $1.5 trillion financing engine aimed at sectors the Pentagon calls mission-critical: semiconductors, AI, energy, and defense tech. CEO Dimon says the U.S. must cut foreign dependence and remove regulatory gridlock. Translation: Wall Street's going industrial again. But this time, the enemy is fragility. Follow the flow of money. JPMorgan plans $10 billion in direct equity bets and $1.49 trillion in loans, guarantees, and syndications. Think factory floors, not trading floors. Nearly 80% of U.S. rare earths come from China, 70% of pharma precursors too. The bank's answer: finance reshoring, robotics, and domestic mineral refining. Each dollar can unlock 5 to 7 more in private co-investment, a multiplier that could swell to $10 trillion by 2035. It's not a stimulus plan. It's a portfolio strategy dressed as patriotism. Rising geopolitical tension is repricing risk. To Dimon, economic security is security. Defense primes have lost nearly half their SME suppliers since 2018. Blackouts cost the economy $150 billion a year. JPMorgan's initiative aims to plug those holes with capital and lobbying muscle, pushing deregulation for energy grids, AI export rules, and launch permits. Expect Citi, Goldman, and BlackRock to follow within 12 months. The battlefield is balance sheets. The weapons are leverage ratios. Money alone can't rebuild capability. 2.1 million manufacturing jobs could go unfilled by 2030. JPMorgan calls it a national vulnerability. Their fix: vocational pipelines in Ohio, Texas, Alabama, embedding capital into community colleges and trade schools. Every plant funded will need operators, not just investors. The capital markets are rediscovering labor markets, and whoever closes that skills gap will own the next industrial decade. What happens when banks start acting like defense contractors? When ROI becomes a proxy for readiness, and when regulation bends to capital velocity? The line between state and market isn't blurring. It's gone. This is profit aligned with policy, not charity disguised as strategy. Dimon isn't just financing industries, he's redefining national competitiveness as an asset class. The Security and Resiliency Initiative is a hedge, a signal, and a blueprint. When $1.5 trillion moves, policy follows. America's next great power play won't come from Congress. It'll come from capital allocation tables. Follow the money. Men lie. Women lie. The numbers never do. Subscribe to Blunt Policy. Share with your favorite policy nerd. Post on LinkedIn.